We call it three levels. First is, are you okay? You and your spouse, you and your partner, you guys okay? From a retirement perspective, from a life insurance perspective, you guys going to be able to live your life the way you want to live it, right? Next level is if you have kids, you're going to be able to educate your kids, take care of your kids, maybe take care of your grandkids. So there's a lot of different planning that we can do in that area as well. And then the third layer is charity. Who else do you care about besides your family? And is that important to you?
This is the Asset Protection Show. Expert strategies by attorney John Skabelund.
Welcome to the Asset Protection Show. I'm your host, attorney John Skabelund. Today, discover how a financial planner can take your asset protection plan from good to great. Asset protection attorneys and tax advisors are critical, but a financial advisor can add significant value to the team. Let me introduce Jim Westermeyer. He's the managing partner and personal CFO at ClearView Wealth Partners. Jim and I have had the pleasure of working together on a mutual client, and I have appreciated his unique approach. Welcome, Jim. How are you today?
Good. Thanks, John, for having me. Look forward to our conversation.
Likewise. Again, I'm excited to have our listeners understand better about how you can bring value to their team. Do you mind first introducing yourself to our audience?
Sure. My name is James Westermeyer. You've done some of my introduction for me clearly. Been in the business 30 years, run a small boutique shop here in Scottsdale and in Northern California. We got about 10 people in our team. I've got extensive experience in owning a business, selling businesses, and then obviously, helping clients create a really good business plan for the financial life they want to lead over the past 30 years. And we really try to create a virtual family office for our clients around what our expertise is and working with our clients, other advisors like yourself, John.
Oh, fantastic. And again, just to be clear, my understanding, Jim, you work with clients nationwide. Is that correct?
That's correct. That's correct.
Fantastic. Well, as you know, my approach to everything is starting big picture, 30,000 foot level, and moving into the details. So if you don't mind, I know most of my audience, they probably have worked with a financial planner or an investment advisor in the past, but do you mind describing what you believe the value a financial planner or financial advisor should be offering to a client and why you think they're important?
Sure. Good question. So if we start at the 30,000 foot view, what I think is a lot of people don't know what they don't know. And that's not their expertise. So we really look at everything from a global perspective. There's typically a lot of lack of coordination in the planning that we see that's been done for the clients we end up working with. You're right. They worked with all kinds of different people. We're typically not starting with someone who's just getting going. They've got some things already in place. They've got things that don't have asset protection. They've got things that do. They've got trusts. They've got assets that need to have done. But lack of coordination on their overall financial affairs is really the majority of the reason why we get hired. And we're really focused on their financial affairs, the administration of their financial affairs, and then how does that relate to their personal affairs? So how do we put a bow on that to the extent they want it and make sure everything's done as well as it possibly could be? And that's really the value that we bring to the table through the planning process, the education process, and then the implementation of those solutions to really help the clients accomplish what they want to accomplish. Not what I want to accomplish, not what you want to accomplish, John, but what do they want to accomplish, and how do we put together a team and then get it done? And so one of the main things that we do for our clients is we are implementation superstars, meaning if they said they want to accomplish something, all of our clients are super busy, successful. Who's in charge of getting it done? So that's one of the roles that we play with our clients. And our clients really appreciate doing that.
Yeah, no, that's a great point. It's about implementation, making sure things aren't dropped, especially between all the advisors. But I want to go back to something you said that caught my attention there. I think most people, Jim, are accustomed to financial advisors and planners like yourself only being concerned about the financial investments. but you said personal affairs as well, making sure that the financial and personal is all working together. What did you mean by that?
Well, so let me step back one thing. Yes, a lot of financial advisors are only interested in the investments. We're focused on the entire holistic situation. Most of our clients have real estate. Some have investment real estate, commercial real estate. They may have a farm. They've got businesses. Those typically aren't things that most financial advisors manage. We help our clients with those things. A lot of our clients are business owners, corporate executives, and professional athletes. So they've got a lot of stuff outside of what we can just manage from an investment perspective. But I think that's where we're different, is creating that business plan to help them accomplish the financial life they want to lead, regardless of how much of their money we actually manage. So, we've got a fee structure that will help us work with the families, the clients, and the next generation around what, they want to accomplish. Getting back to the personal affairs, well, for a lot of people, their business, their personal affairs are tied into their financial affairs. And so if we're doing estate planning or asset protection strategy, what does mom and dad want their kids or their inheritance what do they want them to do with it? Is there family governance involved with passing those assets on to the next generation? Passing it on to your church, passing it on to whatever charitable interest you've got. So we spend a lot of time with our clients and the next generation on what are our goals and objectives here? What are we trying to accomplish while we're living? Or what are we trying to accomplish on the next level? And or do we start giving assets away, during someone's lifetime? So there's a lot of things that we get super involved with and super deep with our clients because it all ties together. From our perspective, anyway.
Yeah. What's your process of making sure you tie that all together, though, Jim?
Well, if we're working with a client and we understand their goals and objectives on an ongoing basis, could be their financial goals, could be their estate planning goals, could be their asset protection goals, could be legacy goals that they want these assets to stay in the family forever. Mm-hmm. We're going to work with a really good estate planning attorney to get that done. But I always encourage my clients to let's have the conversation with the kids, the grandkids, sooner than later. And if we're doing our job the right way, we know where the problems are, and problem doesn't sound good in the family structure. Could be the in-laws. There's always stuff that goes on. Not everybody gets along all the time. So how do we make sure that we can accomplish what our clients want to accomplish with the family? And so we have a lot of family meetings. Or we do a lot of education with mom and dad on how they educate the kids, the grandkids, the daughter-in-law, the son-in-law on what they really want to happen. So that takes a lot of time, and that's a lot of planning. And those are a lot of conversations.
Well, it sounds like it. How often do you usually need to meet with a client to make sure that you feel like you have a good pulse on everything?
Every client's different. So I don't really have a great answer for you. We meet with our clients at a minimum of twice a year. Some that we're super heavily involved, we're managing their money, we're going to meet with them quarterly. Some clients we meet with them monthly. It just depends on kind of what we're doing. How big's the client? How many moving parts are there? How complicated is it? Are we renewing their planning every year? Kind of like getting a physical. Are we going in and rerunning the numbers? Are we on track? Are they selling a building? Are they selling some assets? Is it time to do some additional gifting? So I would tell you the situation's the boss for what we do in that scenario, as far as how often we meet face to face, but we're clearly available 24/7 with our clients.
That's fantastic. Let me back up with another basic question. How does a client know when they need someone like you on their team? What are some of those red flags or telltale signs?
I think for the client that really feels like they're scattered, they've got stuff everywhere, there's lack of coordination with beneficiary designations, with titling, or something's happened in their life and they saw someone pass away or something negative happen to somebody else. They're like, maybe I need to get my affairs in order as well. It doesn't. Here's what I found after 30 years. It doesn't matter what someone's education level is or how successful they are in business. Human nature is most people don't want to deal with a lot of things that we deal with. And you kind of don't know until you don't know. So I'm amazed at how many business owners I work with that their biggest asset is owned in their name. There's no asset protection. There's no estate planning done. They just been busy growing their business and working in their business and taking care of their family. So, I mean, that's a big red flag in my opinion. I think you would agree with that.
Absolutely.
But it happens all the time.
Yeah. Well, another follow-up question for you is, I know you like to call yourself the client's personal CFO. Do you mind elaborating on what you mean by that and what that entails?
Sure. I mean, we're really focused on helping the client make really good decisions with their money around all their financial affairs. So if you think about a CFO, they run the money, they do all the negotiations around the financial piece of a business. We do the same thing for a family. So what does that mean? Coordinating their estate planning, asset protection, their investment strategies, their risk management strategies, educating their kids, and then the planning that goes on top of that to say, are we on track to accomplish the goals financially that we need? So we also create a digital platform for our clients, whether we manage the money or somebody else does, or it's with a bunch of different folks, institutions. We can aggregate that all into a digital platform so the clients can look at their overall financial affairs 24/7. So we've got all the financial assets. They can print off a balance sheet at any point in time with all their other assets, real estate, whatever it may be, their business interests, their private equity stuff, their hedge fund activity. That's all that we can print off of that. And so they can see it real time. If I'm sitting here in Scottsdale, Arizona, and they're on the East Coast, we can have a real-time conversation about planning, where they are, how the overall market's doing. And then also we've got a spot in there for their estate planning documents. We've got a vault that holds everything. So, and all their insurance is in there. So so when you say personal CFO, we've got our arms around really everything that encompasses their financial affairs, whether we're actually managing it or not, but we know exactly what it is. So John, I'm always amazed that I've got a client that will call me and goes, hey, I'm getting ready to buy this vacation home up in, let's say, Flagstaff. How do I need to title this? I'm like, well, we need to put it in a trust. I'm like, well, remind me, what's the name of my trust? So we really kind of understand everything if we're doing our job from start to finish, which is what we want to do. And so we're involved in all the financial decisions they make. And so that, I think, hopefully that explains kind of a personal CFO perspective. Again, the financial affairs and then the governance of those financial affairs kind of all go together.
No, that's helpful. And again, that's one of the things I respect you highly for in working with our mutual client, is how your family office ecosystem means that you're looking at the complete picture. I've been impressed by you guys are looking at business succession, tax efficiency, risk management. It is really important that we're covering all those bases. So I really appreciate that. Anything else you feel like you need to add, or the clients should, or listeners out there should know about your family office ecosystem?
You just brought up something interesting. I'm currently working with a client that I've been working with for 20 years. I've been trying to get him to do business succession planning for 10 years. He called me in October and said, I'm ready to sell. So we went to market, hired an M&A firm. We've recently gone out to market on that. It's going to take a little longer than he wants it to because he wanted to sell it the next day. But it's a big operation. It's probably a $40 to $100 million deal. And so we've helped him work through that. We helped him hire the right M&A firm. We're involved with every meeting. And then on the side, we're doing some updated planning on, okay, if he sells it for 40, here's what he's going to get out of it after he pays long-term gain taxes on it.
Right.
If he sells it for 60, different deal. And then on up from there. And then we're also having a subsequent conversation on how does he compensate his key employees that have been with him to grow this thing. And there's a couple different ways we're talking about doing that. So that is something else that we definitely do. for a business owner. If they're not ready to sell, there's stay and grow strategies. How do you use your key employees with golden handcuffs? Because you don't have stock to give away like a Fortune 500 company would with stock options. So there's a piece of that for sure. And then we clearly work with our clients, tax advisors, on doing some proactive tax planning on an ongoing basis. So a lot of our clients will be a part of their pre-end of the year tax planning meeting. So we'll be a part of that. And what we bring to the table is, hey, here's what the investments look like: gain, loss per year, dividends, qualified dividends, taxable interest, tax-free interest. I think that's a super important thing for clients when they work with their advisors. And again, that gets back to that virtual family office. We should all be working, in my opinion, for the client's best interest, not our interest, but the client's best interest. So, that's
absolutely.
That's kind of the point.
Yeah. I'm grateful you raised that issue. I'm sure you've never seen this happen, Jim, but unfortunately, in my experience, there can be a tendency for the client's advisors not to want to collaborate, meaning that there tends to be turf battles and trepidation, if you will, that I don't want the attorney involved in my tax affairs, or I don't want the financial advisor involved in my estate planning or asset protection. So how do you go about making sure that the client's advisors are collaborating and working for the client rather than the advisor's best interest?
I think if you're starting off a relationship, it's better to get everybody in the same room and have the client introduce the team that the client wants, because we all work for the client. And then I think you can figure out really quick who's on board and who's not on board. And then the next conversation, maybe have a subsequent conversation individually about, certain specifics about the situation. And I think you can find out pretty quickly, are they going to be part of the team, or are they going to be a problem?
Right.
There are some advisors that we've gone to our clients and said, hey, if we're going to move this thing forward, we think we need to replace X, Y, and Z, and here's why. Or we've uncovered some things that probably aren't the best way to do it per your request. Could be cost, could be expertise. Client might have outgrown these folks. It just depends on the situation. That doesn't happen a lot, but it happens some. And so again, my job, if I'm going to be the personal CFO, is to tell the client the truth on an ongoing basis, the good news and the bad news. And it's up to them to decide whether they're going to keep the other advisors or not, because they're paying them. Right? They're not part of my team. They're part of our team, but that's really their decision. Doesn't happen a lot, but it's happened occasionally during my career. And does it get ugly sometimes? Unfortunately, yes, but it doesn't need to. We're all trying to do the best thing for the client.
Exactly.
So.
Well, that you're touching on something that I really think is the most important thing, besides the collaboration and making sure nothing gets dropped in between advisors as far as action items, is the fact that I think a good virtual family office, you have what I like to call the quarterback to this team, who's asking the hard questions, who knows what the client doesn't know yet, and is asking the questions that the client should be asking if they knew to ask them. And so I think that's what you're alluding to there, Jim, is sometimes the team does need to change because we've outgrown a particular advisor, or the advisor is no longer a good fit, or that for whatever reason, it's just not gelling. Can you explain whether you agree, and have you experienced that in your career as well?
Oh, I agree. I agree for sure. I think that you've got to go back and figure out what's the goal of the client, what do they want to accomplish, and do we have a team around them to make it work on an ongoing basis? Not only getting started, but do they have the horsepower to help the client that I just mentioned sell his business and do all the tax reporting and the tax prep ahead of time, and then bring solutions to the table? Like, here's all the things that we could do ahead of time before we sell this business, right? To mitigate some taxes. That's what we're trying to do. Client lives in California. You can't move out of California fast enough. But And that's not a negative thing about California. It's about tax in California. So
Right.
what other things could we do? What could we prepay? What are the things could we do along the way? And so that's one thing that we need to look into. The other thing is how well will the other advisors collaborate on certain situations? I recently, we do a lot of tax prep with our clients with their CPAs. So I've got a long-term client that doesn't have the capital gains this year they had in the past, doesn't have the income this year that they had in the past, but their estimated tax are based on last year's numbers. So we kind of reran everything, had a conversation with the CPA. We're going to be able to lower their estimated payments. I mean, that's a win-win, right? Because
Right.
they were over projecting, and then unfortunately that happens a lot. So that's a couple examples of what we get involved with.
Well, you remind me.
Because if we're doing our job the right way, John, if we're doing our job the right way,
Yeah.
we know where all the money's coming from, when it's coming, where it needs to go once it hits their checkbook. If they're a business owner, we'll run that differently. If they're a corporate executive, we'll run that differently because they obviously get paid differently. If they're a professional athlete, they get paid differently there as well. So we've kind of got a game plan for every dollar that comes through the door and what we want to fund. What does it take to live? What do we want to put away? We trying to grow this money. We trying to live off this money. Everybody's different, but I would say 8 out of 10 things are exactly the same that we do for everybody.
Oh, that's well said. While you're talking, you remind me in my prior experience doing mergers and acquisitions for clients, as you know, oftentimes the tax advisors focused like an eagle on income tax reduction, but sometimes you got to shift gears when you're preparing the company for sale. And
Right.
sometimes it requires an outside expert where that tax advisor isn't necessarily the right fit. Not that we're replacing them, but now we're going to bring outside counsel that is designed to prepare this business for sale. So that's a great point.
Yeah, and a second opinion is always good.
Right.
Yeah.
No, I agree. More information is always better than less. Yeah.
Right.
Well, let me shift gears on a topic as an asset protection attorney, is near and dear to me, and that is all about risk management. And that's
Sure.
one thing where I feel like we speak the same language, and is very unique about you. And what I personally appreciate is that you embrace this concept of risk management and regarding insurance. So do you mind sharing with our audience, what is your philosophy in insurance and what role it plays for the client from your perspective?
You talking about strictly straight insurance, or are you talking about more risk management, more asset protection strategies?
Yeah, we're referring more to liability insurance and why clients need it and the role that it can play in their plan.
Yeah, I mean, so I think if they have assets that we need to protect as a group, liability coverage makes a lot of sense, but also different asset protection strategies we can put in place to shield it to another level. I think a combination of both those, whether you put in an LLC, whether you do different things with certain assets, but the liability insurance should stand first. And obviously the structure, how the entity's owned, should be second.
Correct.
And I think that's a very overlooked part of planning for clients that have real estate, business interests, and things that typically creditors love to go after. And so I think if you get back to protecting our clients, we all know there's divorces, there's lawsuits, there's creditors. How do we make sure through coaching our clients, what are some things you can do to protect yourself? And asset protection is a very big part of that. And then they're going to make their own decision.
Exactly.
A lot of people don't want to do an LLC because the additional tax prep and the additional cost. If you lose a $5 million building because of an issue, that $5,000 you paid every year doesn't really compare to what you just lost. And it does happen. So.
Yeah, no, that's one of the things that I appreciate about you is sometimes I'm getting from the financial advisor or even the tax advisor, hey, why don't we just buy more insurance and not worry about the structures and the layers that I implement. And so that's one thing I've always appreciated about you, Jim, is your appreciation and sophistication to know that insurance has its place, but it's not in and of itself enough. So thank you. Another question I have for you that I know is unique and you shared with me is the family legacy pyramid and that approach that you have with clients. Do you mind just sharing with our audience what you mean by this family legacy pyramid?
Sure. I mean, we call it 3 levels. First is, are you okay? You and your spouse, you and your partner, you guys okay? From a retirement perspective, from a life insurance perspective, you guys going to be able to live your life the way you want to live it, right? Next level is, if you have kids, you're going to be able to educate your kids, take care of your kids, maybe take care of your grandkids. So there's a lot of different planning that we can do in that area as well. And then the third layer is charity. Who else do you care about besides your family? And is that important to you? And then when do we start working on the third layer? We can get layer number 1 done, which is the bottom of the pyramid, the base of the pyramid, the foundation of everything we're going to work on. We can cover all that, and we feel like we've got everything covered as well as we could. Now let's focus on your kids or your grandkids, or they may not even be your kids. They may be nephews, nieces, somebody else you care about besides yourself. Could be your parents. And then the third layer of that is charity. And, where are you in your giving cycle or caring cycle about other people? The best clients for us are people that care about someone besides not just themselves. Because there's a lot of planning we can do, a lot of coaching we can work on. And that's what makes it fun. So yeah, it's the financial piece, but it's also the reward, I think, of doing something pretty cool and taking care of somebody else. So that's a great scenario for us, because there's a lot of things we can do to help them with. And the satisfaction people get out of that's amazing sometimes.
No, absolutely. That's what makes life worth living, right? But that's where I feel like we're in sync. I tell my clients all the time, yes, I'm an asset protection attorney, but what we're really protecting is the client's legacy. If they have nothing to leave when they die, then what was it all for? And that's what's really rewarding for me, is to see that legacy that they're passing on and building. Well, this has been fantastic. I'm going to ask you a hard question now, Jim. I'm sure everyone in the audience now is listening and saying, this sounds great, but what is it going to cost? So do you mind sharing, what does this look like as far as a fee schedule, or how do you get compensated for what you're doing for the client?
Sure. I would tell you we get paid 3 ways. First is, from a planning perspective, we charge an annual planning fee to get started with us and our team. There's a lot of moving parts to get everything done the right way the first time. A lot of onboarding that we do, but that's spending enough time with our team to understand the client's goals and objectives. And our minimum fee is $5,000. It goes all the way to $100,000. Just depends on how complicated the situation is. Okay.
Sure.
At the end of the first year, and that's a flat fee. We don't charge hourly. It's a flat fee. We would do it 50% up front, 50% when we're done, or all up front. So that's kind of how we do it. So I don't have an accounting department, an accounts receivable department to bill. So at the end of the first year, we will come back and talk about what work do we need to do to update your planning. A lot of our clients update their planning like getting a physical every year. It's 50 to 100% of our minimum fee, depending on what we're doing. If we get a lot of the work done the first time, we don't need to update everything. But that's up to the client to make that decision. Second way we're compensated is through implementation. So if we're managing money for the client, we start at 1%. We have a sliding scale, 1% up to $1 million, and we have a sliding scale after that. It's pretty common in the industry.
Right.
If it's insurance we're dealing with, life, disability, long-term care, those are 3 that we implement ourselves. We'll be paid by the insurance company the same way you'd pay anybody. Okay.
Sure.
The third way we're compensated is through active goodwill. If you like the work that we've done for you and your family, you'll probably think of other people like-minded like yourself that could benefit from a second opinion. And so obviously that is not a financial compensation for us, but that's how we grow our business. We work with people like you, John, advisors, and friends and family of our existing clients. And that's how we built this business.
Yeah, appreciate it. And are there any minimums or investable asset minimums or anything else that our audience should know before reaching out to you and seeing whether you're a good fit for them that they should be aware of?
So as far as if we're just going to do assets under management, it's somewhere between $500,000 and $1 million. We just need to make sure it's a good fit. We want to make sure it's a good fit for the client, good fit for us. Ideally, we start with planning first and implementation second. There are cases where clients don't really need the planning that it would take to justify that. So we would start with the investments and kind of work our way backwards. Okay. Depends where they are in the cycle.
Right.
So, yeah.
Well, this has been fantastic. Anything else you want to share with our audience or you feel like they should know before we wrap up today?
No, I appreciate our talk today. If anybody's open or interested in what we do, we'd offer you a second opinion. It's free. A free second opinion. Probably take 45 minutes, and then you're going to walk away with one of three things. I can validate that everything you've done is correct. Number one. Number two, you can go back with your existing team with 3 or 4 things that you should probably be doing that you're not. It doesn't sound like. And the third one is there's probably a reason why we should be working together.
Oh, that's well said. And how can our audience reach out and contact you?
Sure. Let me give you my email. It's James at C as in Charlie, V as in Victor, W as in Whiskey, partners.com. And my phone number is 510-604-2241.
Well, Jim, it's been an absolute pleasure. Thank you so much for your time. And more importantly, it's been a pleasure working with you on our mutual client and seeing a refreshing perspective on your role as a financial advisor and financial planner and how you bring a personal CFO approach and a virtual family office element to our client. Again, as an asset protection attorney, I admire that greatly because we share the same concerns, not only about risk management and liability issues, but that nothing gets dropped, that the advisors are all working for the client, that we're all on the same team, working the same direction. So thank you so much for joining us today.
Sure.
Well, with that, today we're going to wrap up. I hope you enjoyed learning about the importance of how a financial planner plays a role in your team and how they add value to your asset protection. Again, I'm a big believer that your team is the most important part of your planning, and I am just simply one component as an asset protection attorney. So I encourage you to give deep consideration to the role that Jim and his team plays in your plan. And if you're continuing to enjoy the content that we're providing, please subscribe and leave a review. So thank you again for listening. Until next time, stay protected.
You've been listening to the Asset Protection Show, expert strategies by attorney John Skabelund. For more information, go to assetprotectionshow.com.
This content is legal information only and not legal advice. Viewing this content does not create an attorney-client relationship. Mr. Skabelund is admitted to practice law in Arizona, and he may be reached at ultimateassetprotection.com.